think for Bitcoin and for people that are focused on altcoins, yes, from a trading perspective, it's been bad. I've lost money. This has not been fun. I wake up every day and I go, okay, here we're in for another battle. But I've been through enough of these battles to realize that when it feels this bad and there literally is no hope, and I'm getting signs of really intelligent people calling me scared to death, I just increase the amount of things that I believe in the long term to put money into. I was doing that with Nvidia and Micron during Liberation Day. They're not falling that much right now. The only thing in my mind as an innovation that's falling that I believe in that 5 years from now, Tesla's come back down to levels that I think are fantastic. And I also believe Bitcoin's come down to levels that are fantastic.
When Bitcoin sneezes, the entire risk market catches a cold. And this week's reversal proved just how quickly sentiment can flip from euphoria to exit mode.
Increase the amount of things that I believe in the long term to put money into. I was doing that with Nvidia and Micron during Liberation Day. They're not falling that much right now. The only thing in my mind as an innovation that's falling that I believe in.
As crypto slipped below $87,000, the spillover into equities was immediate and violent, triggering a cascade that flipped Nvidia from a strong intraday gain to a sharp decline and dragged the Nasdaq and S&P 500 into negative territory. This abrupt reversal highlighted how tightly risk assets have become intertwined with Bitcoin's volatility, reinforcing its role as the market's purest barometer of speculative sentiment. Visser's analysis cuts through the noise. While Bitcoin and altcoins have erased their year-to-date gains, global markets remain anchored by rising earnings and the long-term momentum of artificial intelligence. The panic surfacing across trading desks reflects sentiment capitulation, not economic deterioration. Historically, such extremes only matter when paired with a weakening economy, a condition not present today. Instead, the unravelling of no-revenue AI stocks and overextended crypto positions marks a necessary rebalancing. Visser points out that megacap tech may face years of multiple compression as they race toward AGI, whereas companies capable of truly leveraging AI, including those outside the US, are positioned for rerating. Within this landscape, Bitcoin's drawdown appears less like an existential threat and more like a cyclical reset that often precedes renewed strength in innovation-driven assets. If this unwind taught anything, it's that Bitcoin still writes the market's emotional script. So stay sharp, stay informed, and don't forget to comment, share, and subscribe for more market-driven insights.
We're nowhere near that in terms of just the S&P fall. So this has really been speculative retail names and obviously Bitcoin. These have been the areas. And for everyone who's also lost money in altcoins, this is all of crypto. So this isn't just there. But I will say this. For everyone who's watched me here or on my weekly, I always say the same thing, and I think it gets boring to people, but I really do believe that we will be climbing a wall of AI worry forever. And I really do mean forever. Behind the scenes, as you know, we're seeing speculative names fall off, and I've highlighted that I created an index which had the names that I think were heavily speculated on, that really didn't have any revenues, that were based on things like nuclear, which may be a solution 5 years in the future, but nothing in the near term. And Bitcoin obviously falls into that camp where it doesn't have a normal valuation side to it. So we're at a point where people have basically bailed out for the time being, and they're getting stopped out. And as someone who, let's say, I had some really nice trading profits going this year until recently. And then about 2 weeks ago, I started to increase my, my regular buying of Bitcoin, of which there's always regular buying. Then I started to doing some increased buying below 100,000. So, between MicroStrategy and Bitcoin, they've eaten up a lot of my semiconductor profits and now my Eli Lilly profits. And we're kind of sitting here, and I can feel that the narrative, as prices are going down, I'm seeing more and more panic on the AI side, more and more people kind of beating their chests that this is artificial intelligence unwind and that the bubble is popping. And that's where this is really going to come down to it. I don't hear many people when I speak to them that use AI or that do as much research as I do across kind of what's coming. And I just feel like in a week like this or a month like this, a lot of this is just losses on top of losses. We were going to see corrections. That speculative name basket has given up the entire year. and it was up significantly. Bitcoin's given up the entire year. We've knocked retail out. So I wrote a piece this week that there is light at the end of the turbulence. I wrote one with a similar title back in Liberation Day, and I hate for people to ignore it. But the message is the same, which is when those fear and greed index get to these low levels, my historical kind of belief is unless the economy follows it and goes down like it did after the housing bubble and like that, that's the only way that it's justified. If not, and we're in a bull trend, and I will remind people, every market around the world is up double digits. So even the S&P 500, and earnings growth is happening faster outside the US than it is inside the US, and US earnings are growing faster than what the market's up this year. So under the hood of everything, AI is still pushing things forward. We'll find a bottom in 6 months from now. People will look back and really not remember the panic that ensued. Global markets are going to outperform because they're seeing a re-rating happen because they will benefit more from artificial intelligence than the Mag 7 will. And if the Mag 7, to me, everyone thinks they're going to benefit, I really am in the camp that I don't think they're going to be able to get the revenues to justify what's happening. But as I've said, these guys are in a race in a lot of cases of history. Think of them more as, presidents in their final term. We have 4 years left before they believe we're going to hit AGI. So they want to be the ones to get there first. That's what they want. That's their legacy. Curing cancer, Demis Hassabis, all of them talk about this, or at least the majority of them do. Zuckerberg did an interview about curing all diseases where he took his 2100 forecast down to 2030. Like, when you get through this, they want to cure this. They want to be the ones to go through it. And even Sam Altman, who's trying to win the consumer game, he talks about curing diseases. So I think these guys are going to spend themselves into problems, but not the kind of problems that people are saying. There's a difference between their multiples not being justified at the levels they are, where they never get the revenues, and that the beneficiaries benefit through democratization of intelligence. And that's why I think small cap stocks, people are underestimating not the fact that they're going to solve their problems, but if you can grow in any way your earnings over the course of next year, and there's a multiple re-rating on cheap stocks, which is what has happened in Europe this year and happened in Asia. In Brazil, you still have single-digit PEs versus the Mag 7. So I do believe that the debt they're taking, it is justified to be worried about it, but not for the market to go down, not for the economy to go down, not for junk spreads to go down. This is not big enough for that. But I don't think they're going to get the revenues, which means they're going to see their multiple compress. And remember, they didn't have to take any debt to cannibalize the world's revenues. The unwind is going to be that their re-rating of their multiples, to me, will come down over the course of the next 5 years, and that the beneficiaries will be the companies that are able to use AI and grow their businesses.
When Bitcoin enters one of its trademark freefalls, the story is rarely about the drop itself. It's about what the volatility is trying to reveal beneath the surface. Jordi Visser reveals that Bitcoin's latest decline is best understood through its long record of extreme volatility, marked by multiple 80% drawdowns that ultimately led to new all-time highs. In his view, Bitcoin has evolved well beyond its early-stage fragility and now stands within a $4 trillion crypto ecosystem supported by structural forces such as exponential innovation, accelerating AI adoption, tokenization, and growing regulatory clarity. The current pressure, however, stems from a convergence of forced selling and structural weak spots across the crypto landscape. Altcoins have failed to reclaim their 2021 to 2022 highs, echoing post.com behavioral scars, while venture capital investors remain underwater from the last cycle. OG holders have been distributing, ETF buyers have begun to capitulate, and retail flows have unwound in tandem with speculative tech names.
Increase the amount of things that I believe in the long term to put money into. I was doing that with Nvidia and Micron during Liberation Day. They're not falling that much right now. The only thing in my mind as an innovation that's falling that I believe in that 5 years from now.
Yet the historical resilience of Bitcoin suggests that stabilization, not perfect timing, is what matters. In a market defined by rapid momentum shifts, this period may ultimately stand out as a moment when long-term conviction mattered more than short-term fear.
Increase
Let's
the
get
amount of
back
things
to
that
the
I
interview.
believe in. We've already had 80% falls in Bitcoin. So let's not stop at 30. It is an asset that historically has been able to lose 80% of its value and then go to all-time highs again, all during its lifespan. So to have 4 of those, that doesn't happen in the S&P 500. And again, there's an element of this of 2 things that I think are important. And this is why I still don't believe that we're going to extend this much further. And I'd like to hear I'm going to ask you a question at the end of this, because I think you'll be able to add some value to me as someone who's looking at data, statistics, and I'm only investing in Bitcoin for one reason. I believe that exponential innovation runs coinciding with it, and that 25 years from now, where AI agents are accelerating what the world will look like in the future, Bitcoin will be a major beneficiary of what's going to happen. So in those 80% drawdowns to get to that level, it was an immature asset. It wasn't very large. It has finally reached a status this year in the crypto entire thing to get up to $4 trillion overall. I mean, it's a real asset class. Here's the problem. The altcoins, most of them, did not get above the highs that were made in 2021 to 2022. And the reason that's important, and I've mentioned this multiple times, and I still believe this to be true, the dot-com bubble left a lot of entrepreneurs with losses. And whenever things would sell off, the hope would immediately turn into despair and a belief that we were going to go through another one. And the pain of that one was so recent that it scared the hell out of people. The VC world is not coming back to crypto because it also has a lot of assets in there. I've talked about the importance of the private market, and we've talked about that OGs are selling. And now everyone that's been moving money for portfolio diversification reasons inside IBIT and some of the ETFs, they're starting to get a little shaky and wonder why they've done this, and they're starting to sell. So the problem is you run into this situation where despite all of the good structural news, all of the innovation news, all of the entrepreneurial hopes, and the administration getting to the Clarity Act, I still believe this stuff is going to be good, but it needs to start holding somewhere in here, and it doesn't have to be a particular level. We could fall 50% off the highs. I remember saying 2 weeks ago, we might get to 80,000. Well, we did. We got to 80,000. I still think there'll be a day when it reverses back higher. And this is where I wanted to ask you a question that I think for the people that have known me a long time that watch us, and probably the people that have known you a long time that watch you, you must have some feeling or insight that there is some kind of forced selling that was triggered by some event. I'd love to hear it, and I'm sure other people would too. Only other thing I'll add, and again, I'll show this over the weekend. So I've highlighted that on the retail side in the US, the correlation between Bitcoin and these speculative names has been 1-for-1 after, and I would say it started more late October. So if you take in that we saw OG selling that forced the consolidation where we were going sideways and underperforming as AI names were going higher, which to me would have been, again, there was a lot of supply coming to the market that Mike Novogratz talked about in September. Then you get the event on October 10th. You get the fall off, and maybe it was whatever. Let's assume it was $20 billion. That's not enough. The OGs were selling more than that. But then now let's add in a retail pullback that fueled a lot of selling in the US. But one thing that people haven't really thought about, and that's because, again, we have a US show and we focus on the US, but the Asia growth factor has completely collapsed also since September. And then you add in, the Fed's not going to cut in December and all these things. And I think we probably got the sentiment low. The one thing about sell-offs, the sentiment was not super high when we were on October 10th anyway, because people were already frustrated with the fact that it wasn't going up. And then it immediately went down dramatically afterwards. So I do believe that we are in just a liquidation that in an asset that moves a lot. If it rallies from here, and let's say it went back to 100,000 by the end of the year, it still would finish up for the year. So I think, again, we're caught in this position where something is now down, 6-7% year to date. And we're all frustrated because this has been an ongoing hood on the market. But if you get through this, I think next year, again, this is about tokenization. It's about the Clarity Act. This is about AI agents. There's a ton of things that are going on. And again, I wrote this and published it in the Substack. And I really do believe that if you look 6 months from now, this sell-off will be looked as something that, hey, I should have just got involved because next year is going to be a great year for risk assets.
Bitcoin's recent volatility reflects a market in the midst of structural recalibration rather than a fundamental breakdown. Multiple 80% drawdowns in its history illustrate a unique resilience, showing that sharp declines often precede renewed growth. The current sell-off has been fueled by forced liquidations, retail capitulation, and OG wallet distributions, while altcoins lag behind previous highs, echoing lingering post.com caution. Correlation with speculative U.S. tech stocks and collapsing Asian growth factors has amplified the downward pressure, yet global innovation, AI adoption, tokenization, and regulatory clarity continue to provide strong tailwinds. Stabilization, rather than precise bottom timing, is the key metric for potential reversals, and a return toward $100,000 by year-end remains within reach. For investors focused on long-term innovation-driven assets, this period may represent a rare window to build exposure ahead of broader market re-ratings. Could Bitcoin's current drawdown mark the start of a strategic buying opportunity for long-term investors in innovation-driven assets? Bitcoin's turbulence may be challenging, but it also signals opportunity. Stay informed, join the conversation, and don't forget to comment, share, and subscribe for more market insights.